I want to ask a question. What is Forex trading? What is Forex trading and how does it differ from stock market investing? Personally, I am a stock market investor. I don't do Forex, but I'm interested in people that do Forex and how they make markets and how they make money, trading Forex. Probably I could inculcate one or two of their principles, formulas or models. I can import them into, stock investing and see how I can make money, how I can create wealth. So forex trading is known as foreign exchange trading. You know, it involves buying and selling, currencies in the global markets. So it is the act of exchanging one currency for another, such as trading the US dollars for the euro. The goal of forex forex trading is to profit from changes in currency exchange rates. So traders speculate on whether a currency value will rise or fall relative to other currency and attempt to capitalize on these fluctuations. The forex market is the largest and the most liquid financial market in the world, with daily trading volume exceeding $6 trillion. It's far bigger than the stock market. Far bigger than the stock market. So forex trading, occurs 24 hours a day, 5 days a week, and involve various participants, including banks, financial institutions, governments, corporations, as well as individual traders. So it's a very, very popular, it's a popular theme among the youths in my country. Forex, followed by cryptocurrency. But personally, I still like, I prefer the old time, stock markets. So difference between forex trading and stock market investing. The difference between trading forex, trading foreign currencies, and investing in the stock market. Number one is market type. Market type. So on that market type, you have forex trading and you have on stock market investing. So forex trading involves the exchange of currencies with pairs like euro, US dollars, British pounds versus US dollars being traded. It focuses on the global currency markets with where national currencies are bought and sold, against one another. So usually they trade in pairs. It could be euro, USD, British pounds to USD, Japanese pounds to US dollars, many different kind of pairs like that. So when it comes to stock market investing, it involves buying and selling shares of individual companies listed, in stock exchanges like the New York Stock Exchange or NASDAQ, or the Nigerian Stock Exchange or the Nigerian Stock Exchange Group, the Nigerian Exchange Group, NGX. So the goal is to invest in company equities and provide and profit from their performance. So it's pretty straightforward, actually. it's straightforward because personally, I think I can value stocks. The fundamentals are there for one to consider, for one to use in evaluation. How do I value currencies? I don't know. I can't value the British pounds or the US dollars or the Japanese yen or euro, or whatever, but I can value individual companies. And that's why I personally prefer investing in the stock exchange. So number two is then trading hours. Trading hours. So under forex trading, the forex market is open 24 hours a day, 5 days a week, due to a decentralized nature and global participation. This offers flexibility to traders in different time zones. So, people trade 24 hours. Some people don't sleep. they wake up to trade Forex. You know. So the stock market actually, stock market typically have a set hours of trading. It's more organized. It looks decent. Wow. So, for example, the New York Stock Exchange is open from 9:30 a.m. to 4 p.m. Eastern Time, on weekdays, and hours vary depending on the exchange and the country. Like in my own country, Nigeria, they open by 9:30 in the morning and close around 20 minutes after 2:20, around 2:20 or 2:30 thereabout, from 9:30 to I think 2:20 or 2:20 or 2:30. So within that limited time, you can trade, you can invest. Number two is a liquidity. So under Forex trading, the Forex market is highly liquid with trillions of dollars traded daily. This allows traders to enter and exit positions quickly, even with large amounts of capital. It's highly liquid, actually. But the stock market, while stock markets are liquid, they are not as liquid as the Forex markets. Not as the Forex market. And so liquidity can vary depending on the stock trading volume and the market and market conditions. So when it comes to liquidity, I think the stock market, the Forex market beats the stock market. But you have to trade constantly. You have to trade daily. You can't buy currency and forget. You don't invest for the long run, for the long time when it comes to Forex. That's why it's called Forex trading, not Forex investing. Forex trading, you must be a trader. And mind you, over 90% of traders don't make money. That is the statistics. Over 90% don't make money. And those that do may not do it consistently. You hear about times like somebody blowing up their accounts. You don't really find such in stock investing. You don't blow up your accounts. You don't blow your accounts in stock investing. Number 4 is leverage. When it comes to Forex trading, Forex markets offer high leverage, allowing traders to control larger positions with a relatively small amount of capital. Leverage can increase potential profits, but also magnify risk. That's why they blow up their accounts. Stock market investing. Stock trading generally involves lower leverage, and regulations typically restrict the amount of leverage available to retail investors in the stock market. The leverage allowed is quite small. It's not as big as what is obtainable in the stock market, in Forex trading. Please don't forget to like this video, all right, and subscribe to this channel, because I'm giving us information and education for free. So how do you pay me back? How do you reward? How do you reciprocate? How do you say thank you? Just by subscribing, that is all. And just liking this video. Nothing much. It doesn't really cost you. Within seconds, you can do that. It doesn't really cost you much. Please do subscribe, okay? So I can be encouraged to keep on sharing this knowledge accumulated over 18 years, to you. Or should I start pleading with you? In Nigeria, we used to say it, I beg, I beg, I beg. Should I be saying I beg? You should subscribe. All right. So don't be, learn to do the right thing, okay? Number 5 is market participants. So in forex trading, participants include central banks, hedge funds, corporations, and individual retail traders. The market is decentralized, meaning there is no central exchange where all forex transaction occurs. There is no central exchange. It's just decentralized all over the world. Then for stock market investing, participants include institutional investors, retail investors, and market makers. Stock transaction typically takes place in a formal exchange, formal centralized physical exchange, so to say, like the New York Stock Exchange, like the Nasdaq, or the Nigerian Stock Exchange. It's a physical building where investors usually market participants, stockbrokers, dealers, clerks, market makers, they gather to do their business. Number 6 is market influence. So under market influence, let's look at forex trading. Participants include central banks, or rather, for market influence, actually. So under forex trading, currency values are influenced by economic indicators. Number 1, interest rates. Number 2, inflation. Number 3, geopolitical events. Number 4, and monetary policies. Number 5, set by central banks. These factors actually are not as fundamental, I think, as what is obtainable in the market, the stock market. So forex traders focus on macroeconomic factors and global events. Now let's come to stock market investing. Stock prices are influenced by company performance. These are solid obonge factors, So they are influenced by company performance, earning reports, industry trends, and the broader economic factors. Investors focus more on corporate, on company specific and sector and specific news, along with market conditions. Number 7 is risk and volatility. Risk and volatility. When it comes to forex trading is generally more volatile due to economic events, central bank policies, and geopolitical news. Exchange rate fluctuations can be unpredictable, leading to higher short-term risk. It's not as predictable as company results. It's not, So as for stock market investing, while stock market can be volatile, stock prices tend to be less volatile than currencies, particularly over longer periods. Stock market investors often rely on fundamental analysis and longer term trends. So how do you carry out fundamental analysis in forex? Fundamental analysis of currencies? Well, maybe practitioners know how to do it, but personally, I don't know how to analyze currencies, to analyze individual country currencies. So in summary, forex trading focuses on currency pairs and aims to profit from changes in exchange rates, offering higher liquidity and round-the-clock trading. In contrast, stock market investing involves buying shares of companies where the goal is to profit from the company's growth and performance. While both markets offer opportunities for profit, they differ significantly in terms of market structure, trading hours, liquidities, and risk factors. So forex trading is inherently risky. You hear of cases of people blowing up their accounts, this and that. But in the stock market, you can't blow your accounts. It's impossible. You're invested in 10, 20, 25 companies. How can you blow your accounts? You are investing, you're not speculating, you're not trading. The risk is manageable.